Welcome to the 8 Steps of Financial Fitness with Old Mutual. My name is Sachaba Gleba and I'm your host. In the previous workshop, we spoke to Zain about long-term investing. Today, we are speaking about investing for a future that matters. We've got Fawaz Fakier, who's the ESG Portfolio Manager of Old Mutual Investment Group. Welcome.
Thank you and good to be here.
All right, so Fawaz, why does responsible investing matter?
So there's a beautiful saying that goes, only once the last tree has been cut down, the last fish caught and the last river poisoned, only then will we ask ourselves, can we actually eat money? So after a lifetime of successful investing, I can't help but ask myself, what kind of world will we be left with? A world with severe weather changes, social unrest, water scarcity, So I think it's very important for all of us to be conscious of our everyday impact that we have on the planet and, the impact of societal inequalities on our communities, etc. And I think we have to act soon. It's also, we cannot win in a world where everyone loses.
True. We're only looking at one group's success and not looking at everyone's success and well-being overall. And I love that you're saying sooner rather than later. So how does responsible investing differ from conventional investing?
So responsible investing adds an additional component to traditional investing, which means, so over and above the normal traditional investing considerations, responsible investing looks at a company's impact on the environment, on society, as well as on the economy. Whereas traditional investing is concerned with, investing in a company with the financial return in mind and growing your wealth. So really responsible investing is looking at it more holistically and considering a company's greater good, to society and to the planet, in addition to giving you a financial return.
And how will this inevitably change the world?
I think we all have a role to play there, us as individuals, corporates, government, but ultimately us as investors, we have a specifically very crucial role to play there where, money talks, that's the reality. And, if an asset manager goes to a company and tells the directors and the leadership, we won't invest in your company unless you evidence to us that, you guys are reducing your carbon footprint, or you guys are investing and empowering disadvantaged staff, or creating some meaningful change, then we won't give you any money. And this initiates action on their behalf.
How do asset managers know if companies are responsible in doing their part?
So traditionally, we had financial metrics that we relied on, things like, is the company making a profit? How much debt does it have on its books? How does its balance sheet look? But we've realized that there's so much more to it than just financial measures, so much more insight we can gain into the quality of management of companies. And really, let's call these non-financial indicators, stuff such as environment, social and governance scores, which provide additional insight into how sustainable a company is.
And what is an ESG, for someone out there who's wondering what this means?
So basically, under the E, which stands for environment, we look at things such as, a company's contribution or what a company is doing towards climate change, things like pollution, things like, what it's doing in terms of water scarcity and its impact on the environment. If we talk about S, which stands for the social, this is really how a company impacts people, from the communities it operates in to the greater society, to its employees, how it treats its employees. Are its products safe to use? Are its products healthy for food business? And governance, which is the G, is really self-explanatory. It's how well a company is governed. So we look at things such as, is the board of directors, are they diverse? Are they independent? Are the company's accounting measures transparent?
So now what I want to know is, am I compromising on returns if I invest in companies with a high ESG score?
This is the great part, Sachaba. People often think they have to forego some financial return. And there was a study I was reading which took about 2,200 different independent studies of companies' ESGs, companies' high ESG scores. And 90% of those studies came out positive, meaning that these companies outperform their conventional or lower ESG peers. So not only are you investing in good quality companies, you're also getting better performance over the longer term. In addition to the better performance, high ESG companies are shown to have lower risk. Risk can be defined as the sort of the magnitude you can expect your investments to fluctuate. So obviously no one wants to experience huge negative losses, so that the lower your risk, the better. I think in another study, if one took some money and put it in American stocks between 2005 and 2017, which includes the financial crisis, it was shown that we would have avoided about 90% of corporate bankruptcies in that period, which is an amazing sort of stat. So I think the question I have is, if it's giving you a better return, lower risk, and you're doing good for the planet and for society, why would somebody not consider responsible investing?
But why do you think these companies with high ESG scores do better than conventional companies?
Yeah, so I think if we break it down into the various buckets, like looking at the environmental factors, companies that are environmentally conscious, they use their resources in a better way. They use their fuel, electricity, their water in a more efficient manner, which then translates directly into cost savings for the consumer and ultimately for us as the investor. On the social front, for instance, it's shown that companies that treat their employees well have more desirable places to work in. And they retain their staff more and recruit better talent. And also, companies that are well governed are shown to be more innovative and more have better ideas, and are shown to be more resilient in tough times such as the COVID-19 pandemic, for instance.
I think right now, though, a day-to-day person is wondering, how do I go about investing responsibly in my personal capacity? What advice would you give to that person?
The nice thing is there's more and more products, especially globally. We've seen tons of products that give investors choice in terms of responsible investing. And South Africa is latching on, and especially Mutual Investment Group has launched the first actively managed sort of South African ESG equity fund back in March. And investors can now access these funds. Retail investors can access these funds quite easily, which gives you exposure to these good quality ESG companies we talk about, with a lower carbon footprint as well.
Fawaz, what an eye-opener. So if someone is watching the video, we've talked through responsible investing, ESG, what else would you want them to take from this video?
To close with an analogy of fitness, tying in with the financial fitness campaign, when we embark on a path to get fit, we look at it holistically. We look at, it's not only what you do in the gym, also what you put in your body. It's also a longer term haul. You're in it for the long term. And another example is you don't only work legs without your upper body, or vice versa. And that's how I like to think of responsible investing. It's more holistic than what we've traditionally known, and there are many components to it. And we are more educated these days around the additional issues, and we have the knowledge, the education, and the data to invest more responsibly.
Love it. Fawaz, this was so enlightening. I think even for me specifically, I'm learning so much. So thank you for sitting down and breaking it down to us. All right. So one thing that I took from this is that there's the part where you invest, you seek out to invest, you do your research. But I didn't know that you could invest responsibly. And I think Fawaz broke it down for us and explained how you can go about it. I'm thinking at the time I used to stay in Cape Town and we had the water shortage. You have so many resources. You can just get information and find out how you can back companies that are backing causes that really matter. So in our next workshop, we'll be covering something else that's going to be enlightening and educating. We'll see you then.